All right, welcome to the Nadex application and strategy webinar series. And my name is Daryl Martin. I'm with ApexInvesting.com. Before we start up, first thing I make sure I show you is the disclosures. So obviously, what you're going to be seeing tonight is unique information presented by Apex. Also, nothing is a solicitation to buy or sell, etc. Make your own decisions. You're responsible for what you do with your money. Is the bottom line. Okay. And then, of course, futures, options, swaps, trading, they all involve risk. They may not be suitable for every investor. They can, of course, easily result in financial loss, ideally in gain, but, hey, realize there is risk. And in the end, in Nadex, you can't lose more than what you put in your account. And that's the one biggest thing that's different about this disclosure from any other disclosure you see, is you won't see, you may lose more than what you put in. You don't see that on futures accounts or stock leveraged accounts with margin or Reg T margin. You don't see that on option accounts. Depending on the option strategy, every single trade is fully collateralized, and therefore you have to have the capital up front to do the trade. But you still get very effective leverage in the process. And let's see here. Okay, I got a question on this real quick. So again, just to make sure you have seen the disclosures, again, there is risk. And appreciate that. Yes, thank you. All right, so anyways, we get all the information up there, and you've got a chance to look at it all, okay? Of course, check out Apex Investing. Also check out Nadex for their full disclosures and everything else on trading. Nadex is an exchange. We are just an educator. We teach you how to trade. We're traders. We're trading all day, day and night. So if you don't have an account yet, first thing, before you even go to Apex, hop on over to Nadex.com, okay? Go to Nadex.com, click on Trading here at the top, and then click on Demo Trading Account. The link is also at the very bottom under Trading Demo Trading Account, right there. And this takes, you literally should do this right now. If you don't have a demo, okay, if you're one of those 10 or 12% of where they said you don't have a demo, do it right now. Put in your username, your first name, your last name, phone number, email address, click apply for demo. You will have a demo for going through this entire course. It'll help you. Okay, so just put that in. Immediately they're going to send you an email, and you can log right in to your Nadex account. To log in, then you'll, up here at the top, just log in, enter the username you chose, enter the password. If it's a demo, click demo, and then click log in. Pretty simple. To get a live account, then what you'll want to do is just click on create an account. It's only a $100 minimum funding requirement to get an account live, and also by doing that and placing a trade, you can get your demo account extended. But to get an account live, fill that out. It takes about 5 minutes to go from start to funded in most cases, and it's really simple. Obviously, you're probably going to want to fund with more than that for good risk management, but that is the minimum funding requirement. So it makes it easy to at least get started, get in, see live versus demo, all the other stuff that goes with that. Okay. Now, once you do that, you're probably going to want to watch this webinar, maybe other webinars we have, and get access to additional education. Hop on over to ApexInvesting.com. And you can sign up to be a free member. Just click get free access. There's no credit card. There's no commitment. It's a lifetime free membership. Okay. And then log in. And then you'll see that right here in education, we have webinar recordings. And we put bonus webinars. This is where we'll be putting this webinar. We put all of our bonus webinars here. So if you want to see this one and previous ones we've done, you can log in right there, and they're all loaded in. Okay. So we got Nadex spreads made simple, Nadex binaries made simple, advanced Nadex binary strategy overview, range-bound markets, breakout markets, elite method, premium collection, tips on trading Nadex at night. Sound familiar? This one's focusing on binaries, and MVP trading systems, all sorts of different trading systems that we have in here. Okay, and just different ways that you can trade. So tons of education, and that's just like Series 3. We have Series 2, Series 1. We also have webinars every Thursday that you can log in and trade. So right here every Thursday, not trade, but watch. I guess if you want to trade, you could. But Thursday webinars we go through and we do. They sometimes they're very, very structural and topical. Sometimes they're very open Q&A. They always have time for open Q&A. unless the whole, it's just very structured. Like last week, we spent a lot of time on what we call the boomerang strategy, and so we spent the entire time on that strategy from beginning to end. And like, here's an example. Like here under education, here's the whole boomerang trading system, the course, and the videos, and you get access. You can check all that out. Now, you may also have additional questions that you want to ask maybe after, okay? After this webinar is over. Any day, anytime, and people ask all the time questions about Nadex charts, steps on these rules. I'm new to trading Nadex binaries. I've traded other binaries. Comments, questions. I mean, it's all sorts of stuff. Money management, psychology, what time of day I can trade, what instruments should I choose, how can I interact with other traders, how do I get data feeds for futures and Forex and platforms without having to pay extra money for the underlying markets. What kind of strategies are out there, what kind of systems are out there, how do I read the markets, how do I read volume and things like that. How do I find the best binary or spread to trade? And then, of course, putting it all together and looking back on what you did right, what you did wrong, what you want to repeat, and what you don't want to repeat. And so we sort of put it like that. And if you're lost, just use the general form, and we'll move your post to the right section, okay? Nobody's going to, G out and say, hey, make sure you check this section out. So, and then also I have a radio show every day. Feel free to watch that live. I go through news. I went through news for, what's upcoming tomorrow. We got the Pound news report coming out. And of course, that will be updated here in a couple hours, probably right after the webinar. We'll add that to our news trading plan. But you can watch, I go through step by step on all sorts of things on the radio. Sometimes I just do a general show, and sometimes I do a very topical show. I'll lay out iron condors, straddles, strangles, in the money trades. I'll do live trades. I'll do hedge trades with spreads and futures. There's archives right there as well that you can check out. And then over here, under news, you can check out the news trading plan. We talk about different news announcements coming up, which ones actually consistently impact the market. Because a lot of people think, hey, should I just trade every high news impact plan? No. So, there's a lot of tools. These are all the things I'm showing you right here. You can check out for free, okay? Get access to them and everything. We have a couple, official economic calendars and some great feeds coming in. We have deviation levels. So how far is the market going to move each day? Incredibly accurate and free. Binary scanner, so helps you find the binary that you want to trade really quick, makes it really easy. And spread scanner, so also makes it really easy to find what spreads do you want to trade. So it makes that very fast and simple to do. So you can go in here and how much time to expiration, what's the risk, what's the reward, what's my risk reward ratio, how close is it to the market. So all sorts of stuff. So it looks really complex at first, but it's a lot simpler than it looks. Okay? One of the really helpful features, because we're talking about trading at night, is we actually show you what markets are open to trade. So you'll see these X's and the green right there. So market is open. X, market is closed. It opens a little bit later. So over here, market's closed, but it'll open at 3 a.m. Like this will open even later in the evening. And we even have an expiration schedule. We're going to add a spread one. We have a binary one on here. And the spread one's pretty simple. But the binary one shows all the binaries and the expirations. We actually have to add Euro-Yen now because Nadex just added the Euro-Yen binaries to their nighttime hourly expirations. So we'll be able to put those in there. I mean, they're 2 hours long, but they start basically at 6, and then they expire at 8, 9, 10, 11, 12, like around the clock. So we'll have to make that update. And I'm sure, Skelton, you're on this webinar, if you can remind me to do that tomorrow. So a question, can I add the current indicative price along with the binary scanner? No, I can't. I'm not allowed to. There's actually a post in the forum. Basically, I can't rebroadcast that price. So, because it's a derivative of the derivative. So, there's a long explanation, but no, I can't do it. So, we're working on making our own indicative, though. So, we are always upgrading and adding more tools and features and everything else. And it's really the whole goal is traders helping traders. And you'll see that when you get involved. All right, so trading overnight as a part-time trader. So what binary contracts are available at night? What spread contracts are available at night that you can trade? Taking advantage of nighttime news trades. We'll go into that a little bit. There's a couple different strategies. We'll talk a little bit about how to use volume strategies at night. So this is probably the main one I get to use consistently. Is a volume strategy. We call it boomerang. We do that consistently. And then we'll talk a little bit about some Forex trading. and some basics on it, and it's not as complicated as people think it is, especially when you're trading on Nadex. It makes it really, really simple. And then just how to put all this together. You have full-time jobs, and you want to be a full-time trader, or at least you want to be able to trade enough to quit your job, one of the two. Maybe you only want to trade a couple hours a day, but you obviously, if you're working from 8 to 5 or 9 to 6 or whatever your hours are, and then you get home and you got family and you got to eat and you want to relax, and you can't trade for 4, 5, 6 hours. So how can you trade for maybe an hour or two in the evening, maybe an hour in the morning? But what's available that you can do? Because understanding what you have just the flexibility to do will help you focus on what to learn. So many traders that come in, especially because we have so much education, sort of get overwhelmed. They spend like 4 weeks, or I've literally seen people say 6 months, watching every piece of education we have. And it's like 400 hours, 500, maybe 500 by now, hours of total education, especially including the radio shows. That number gets even a lot larger. And they sort of get information overload. And so you really want to focus. And don't try to be a jack of all trades, literally. Okay? You want to come in, I'm going to learn this. I'm going to get this down. Once I got it down, I'm going to learn this. I'm going to get it down. Once I got it down, I'm going to learn this and get this done. You want to add plays to your playbook. And it's important to have more than one play in your playbook as a trader. But don't try to go out and practice, kicking, throwing the ball, Hail Marys and running the ball all at the same time and wonder why it's confusing. Pick a play, pick an exact play with that play, and run it over and over and over again until you got it down in muscle memory, okay? So I'm going to show you some of your choices. You can decide where you want to do it. It depends how often do you want to trade, and what do you want to take advantage of and things like that. And so we're going to go into that. And the cool thing about adding on some things like news is there's times that you back off of trading because a big report's about to come out. Well, if you understand news, then you may back off of play A, but you can go into play B because it's for news trading. Okay? If you want to access any of the information at Apex Investing, is to just hop on over to apexinvesting.com. Okay? And just sign up. That's it. That's all you got to do. So hop on over there and sign up as a free member. But I want to walk through some of these different strategies so you know what's available, you know what strategies are available for you, and you can start, obviously growing as a trader and be able to take advantage of it, because these are things you can't do on stock at night unless you're trading some international stock, markets. And you don't have to worry about having $25,000, which you have to have that minimum to even be able to trade, day trade stocks. And you don't have to worry about massive, leveraged margin calls that can cut both ways against you, because everything has capped risk at Nadex. And you can trade neutral strategies. When the market's flat, you can make money. When the market's moving, you can go in, you can make money. And anytime you're obviously trying to make money doing that, you also have capped risk in the process. So let's see here. Let me pull this up. And here we go. Okay, so what we're going to look at first is just what's available at night on binaries, what markets are available. And so we've got to add on one more now. But we have the US yen, the euro dollar, the pound dollar, and the Aussie dollar. And now, like I said, the euro yen as well. They just started that last week. And they keep adding more and more contracts. They're growing like crazy. I think it's like 53% quarter over quarter, or first quarter over last year's first quarter, just in the one quarter. So they're growing really fast. And so right here you can see that every expiration. Okay? So to help explain what this means for you, this simple little binary expiration chart. And again, we're talking about the binaries right now. Is you can go in, and the yellow ones are what's called daily contracts. And so on FX, that means a daily contract usually starts 23 hours before. Unless it's like Sunday or something like that where it wouldn't open. But they basically start 23 hours before. So, 7 o'clock and 11 o'clock, 3 a.m. So, just looking at the nighttime section, you got all the FX pairs. Okay? And as far as early morning trading, you also have, 7 a.m. And then you can look over here, and we also have, like DAX and FTSE, even have early morning expirations. The orange ones are 2 hour. They're called intraday. 2 hour expirations. So that means they started 2 hours before they expire. So the 8 o'clock started at 6. Now you can get in and you can get out as much as you want to between 6 and 8. Okay, so you don't have to get in and hold the binary till expiration like you do at a lot of overseas non-CFTC regulated, binary places. You can hop in, hop out of the trade, $20 later, up or down, whatever. Okay, and 20 isn't a limit. I'm just giving you an example. So, anyways, these start at 6, they go to 8, and then of course the 9s would start at 7, the 10s would start on down the list 2 hours before they expire. You also have the Nikkei, which is a little harder to get data feed access to. You're gonna have to fork out a little bit of money for that. So just be aware. You're looking at somewhere between $60 and $100 to get probably access to the Nikkei 225. Now you can get the free access to their charts, to the basic charts on Nadex. You can use those, but you're not gonna have things like volume and stuff. But it's a cool contract. It is incredibly volatile. It has a lot of opportunities. It's definitely worth it, but you may want to focus on Forex as you grow the capital and then use some of that to help pay for that data. And we have information on how to do that over on our site. And then we'll go over here. And then, like I said, in the morning, you got some, the FTSE and the DAX. So if you're an early morning trader, I know we're sort of nighttime, but this may apply to you because this is Eastern time. And so depending upon where you are, you may decide to get up early. I know when I first started trading, before I got to, quit my day job, I'd trade. I actually do most of my research at night. I do some trading at night, and I'd get up early in the morning and do a lot of my trading. So nighttime trading, maybe morning might be a better solution for you because you can go in and do contracts that expire like that hour, next hour. So it's not like you have to hold the trade for 4, 5, 6 hours. You can leave and go to work. Okay, so that may open up a few more opportunities for you. There's a little bit more volatility in the early morning hours than there is usually in the evening. Okay, and volatility can be good for certain types of trades. Of course, flat can be good for certain types of trades. But I just want to make sure you're aware of what's available. And you're looking at international indices and Forex for trading on, binaries at night or early in the morning, previous to 8 a.m., okay? And they have expirations at that time. Do you have any questions available? Or not available, any questions about what binaries are available in the evening or, first thing in the morning? John, is the chart available on what? Specifically. Why did Nadex match expirations to U.S. markets instead of local markets? One, they're in the U.S. Two, they do match them to when the floor or that specific exchange closes that market for reset. So they actually match it to the pit hours, if there is a pit. So, gold closes at 1:30 in the pit. Now, the Globex keeps going, but gold itself closes. Silver closes at 1:25, copper closes at 1 o'clock, oil closes at 2:30. So they actually match up to the pit hours because that's when settlement actually happens on the futures exchange. So, yeah, we do show you actually how to get charts for pretty much anything, John, over on Apex. Just go to Home, start here. And we walk you through how to get a platform and chart access. So, including, the FTSE and the DAX. Definitely. Yep. So those are easy to get access to. But yeah, we have like step by step. We even have some videos under education. We use NinjaTrader, and it says how to use it. And right here, we actually have videos like show you how to download it, how to set up the data feed, how to do all that for free. So sort of the links are here under Start Here, and then the videos are over here. We're going to link all that together pretty soon. But we'll just keep improving piece by piece on there. Okay, so everybody's got that down. You can see what markets are available. And the cool thing is they now have 5 instruments with expiration pretty much every hour. With the US yen, the euro dollar, the pound dollar, the Aussie dollar, and the euro yen. Okay? Now, some tips and tricks of my own. My favorite one out of all of them is US yen. It's also the most traded one, and it's probably because of the very reason that it's my favorite one. I'm hoping that they'll continue to add on more strikes like this. But what they do on US yen that's unique compared to all the other strikes is they actually make it to where the difference between the strikes are only 5 ticks wide. So you'll see right here, literally, 102.09, 102.04, 101.99. So there's a lot of strikes available. So even when the market's flat, there's like a lot of opportunities. So some of the other markets, like euro dollar, is pretty flat at night. Okay, usually. And so you'll notice there's really not a whole lot of potential trades on euro dollar in the evening. It doesn't mean that I don't get trades. It doesn't mean I don't have them. It just means like if I'm trading US yen, let's see. Let me narrow this down to like 2 hours. There we go. Okay, so if I'm looking at euro dollar, I mean, there's really one tradable, liquid strike there. It's the one that's going to be close to where the market is, just because there's not a lot of volatility. But if I add on US yen, I can see there's a lot more choices for me, and that leads, of course, to why they have a lot more trader volume on them. So I'm hoping that they'll continue to add additional strikes to, minimize those widths on the other currency pairs. And it really comes from request. The more traders request things and they know that you want them, then they'll list them. They've been really awesome about, listening to, what traders are looking for and what's in demand. And now, like I said, they have other ones too. They also have the Aussie and the pound and the euro yen for every hour. Okay? So let's check those out. Right here, they're all, by the way, everything but US yen is 10 ticks wide for the intradays on the FX. I mean, the ones that expire in 2 hours or less. So, but you'll see there is more over here on the Aussie, Same thing, pound dollar. Of course, Aussie's a little more volatile. Pound dollar is a little more volatile. Pound yen's even more volatile. Euro yen's very volatile. So therefore, even with the wider strikes on those, they still actually do have some, decent selections that work out really well. And they actually added in, it's like some additional stuff too on the euro yen, which is pretty cool. That's actually newer. Let me see here. I want to check that out because that's am I in live? Live, okay. I think they may have actually put them at 5 ticks wide on the euro yen now. Now they're 10. Okay, I don't know where I got that from. Thought I was seeing 5 ticks wide. I guess I was looking at the US yen up there. Yeah. Okay, so yeah, euro yen is 10 ticks wide, but still there's enough volatility to give you several strikes that you can play with. Okay, so the euro dollar, when a strike lines up, it's great. The other ones, pound dollar, US yen, euro yen, more likely you're going to find strikes that'll line up for whatever strategy you're looking for. Okay. In the evening. Now, during the day, there's plenty of volatility. During the euro session, there's plenty of volatility for the euro dollar. Just at night, it's a pretty flat instrument. And the reason you don't see the pricing on it is just because there's not a lot of volatility. And the expected movement is built in to the pricing of the contract. That's how all options work. Now, just because, Aussie dollar, euro dollar, pound dollar, euro yen, US yen, are there still, contracts at night I can trade on pound yen, dollar franc, dollar CAD, Aussie yen, euro pound? Are there still contracts available? Like, are there expirations at night that you can trade? I'd say the pound yen and the dollar CAD and the Aussie yen. They're not every hour. But are there other ones that do expire at night? So yeah, there's a 7 p.m. expiration, there's an 11 p.m. expiration, a 3 a.m. expiration, and a 7 a.m. expiration on all of the FX binary contracts. Okay? So you still don't forget about those. It's real easy, especially if you're trading 7 or 11, to totally forget about the other pairs. There's other pairs that you can check out that do have expirations at night. Okay? Now, what about, what if you want to trade... let's say gold. Can I trade gold at night on Nadex? See what you'll say. So is that available? Yeah. Because I can get in and out before expiration. I don't have to hold the thing till 1:30 tomorrow. Okay? So if I go up here and reset my filters and see what's available, there's plenty of contracts available. Okay? And a few point move, it actually can, make a little bit there, and you just look at it. Obviously, you need larger moves. A lot of times you don't have big moves, but sometimes you do. Like if there's FOMCs or the Fed's going to make an announcement after the market closes, things like that, you can get some big moves. So don't forget that you still can trade these other markets in the evening. It's just, if you're wanting those defined expirations, that's really where, the FX markets are going to come into play. Okay? So that's really the binaries as far as what's available. And another thing, we'll talk about this, but one of the cool things is if you want to eliminate the whole time decay issue, if you don't like that, you just go further out in time. So as an example, if I choose, let's say 94.40, okay? Notice how the one that expires, let's see how close we can get. Okay, so the one that expires in 27 minutes is only worth $6, $6 risk. But it's $6. $8, and that's not quite lined up, but because it's 94.39 and 94.36. But an hour and a half, $8. But it's going to lose $6 in that last 30 minutes. It loses $2 in that hour in time value. We go down here, $21 to $8. Wow, we lose during this period of time, the 4-hour difference between these two, that's the 2-hour difference between these two, we're going to lose half the value. So a lot of time value going in there, which can be good if you're doing premium collection. It can be bad if you're trying to trade an out-of-the-money contract. If I go further out, and we find that same contract, 94.40, now look at this, we only lose $5 on the 3 a.m.s. If I go out even further, it's only $3 on the ones that expire at 7 a.m. If I go out even further, $3. I can basically get $1 an hour. And here, it's $2. So by going further and further out in time, we actually see that there's less and less of an impact of time decay on the binary contract during that time. So if you are wanting to trade directionally with binaries and you want to lower your risk, now you have to get a little bit bigger moves, okay? But if you want to trade directionally, you want to get rid of that time decay, even at night, you could go in and you could, say, buy this contract. And let me show you. You can actually use a simulator. You can say, what would happen if the market went up or down, 40 pips? Now, this really doesn't factor in time. It means right now, except for the ones that expire later. Because the ones that expire later don't really have that big time decay impact. So yeah, this one would make, a fortune, but it'd have to do it in the next 25 minutes during a usually very flat time. This would make a lot of money. Again, if it doesn't move, though, and a 40 pip move on the Aussie dollar at this time of night without news to move it, very unlikely. We go down here, we're still making a decent amount, but again, we lose a lot of money in time decay. So these out-of-the-money binaries, these cheap binaries that everybody runs to, they're throwing a lot of money away. So you want to figure out, use that time decay in your favor, or go further out in time. This one, hey, you still more than double, 151% return. So you make $41 on a 26.50 risk on a 40 pip move, and that expires at 3 a.m. with very little time decay, like $1 an hour. If I go down here, less than $1 an hour, 117% return on a 40 pip move. And 89%, so it goes down a little bit, but still $33 risk for 62.50. I got till 11 a.m. tomorrow. So you can really use these further out binaries. People forget about them all the time, but the scanner makes it really easy for you to find them and find those trades. So if I went in here and go, you know what, I want stuff that has a little bit of time to expiration, and I want out of the money trades, and I don't want to risk more than $45. I will say less than 10. So 10 to 45, then I look at that. I can easily see all of them on the same screen. Okay, without having to click between all the different Nadex tabs. And I can see how much money would I make on that contract had it moved, what's the best payout, and which one has the least time decay, because they're all the exact same strike, 94.40, 94.40, 94.40. Does that make sense? Do you have any questions about that? Because that's a really cool concept when you get it down. How do I trade low risk out of the money binary contracts in the evening? There in the day, whatever, but with a very minimal impact of time decay. So it can totally, it can open up a world of strategies to you. Like, you don't like risking $70, and you don't like the speed of, dude, if it doesn't do what it's supposed to do in the next 5 minutes, or if it goes against me by one tick in the next 15 minutes, this might be a better strategy for you. One of the strategies I've been working with, we have what's called the Apex Alliance. It's like the members that have been trading full time. They've been with Apex for a long time, and we're always beta testing and trying stuff out in the background before we release it. And one of the things we've been talking about is, would you be better off buying a $33 contract and buying 2 of them, okay, and just going for like a $12 profit per contract, $12.50 per contract, than you would buying a $70 one and going for a $25 profit? The answer is actually yes, because it's a lot easier for it to move and make that $12.50. And it's at front of what we call the gamma curve. It's at the front of it, what's called the gamma curve, which is where the binary price speeds up and then slows down. I'm sure some of you who have some experience trading have noticed when you buy those $70 ones, they seem to go really slow, and they just get slower and slower and slower, okay? But if you buy out of the money, that thing's moving in your favor. That thing gets to go faster and faster and faster before it slows down. Well, that's why it's called a gamma curve. And we'll do an advanced training on that later. But it's like, what if I just bought 2 $32 ones and that's $64 risk, and I went for like a $10 or $12 profit on both of them instead of buying one $65 one and going for a $25 profit. It didn't have to move as far for me to make my money, get out of the trade. I could even layer out if I wanted to. And people go, well, that sounds great, except for the fact that time decay, you're buying an out of the money binary. No, I'm not. I mean, yeah, I'm buying an out of the money binary. My time decay is like $3.50 in 4 hours. Okay, time decay is not my concern. So, sort of a cool, it sort of opens up your eyes as you start realizing this. And this is what the scanner does for you. It lets you compare all this stuff live at once. And it's free. So, definitely use it if you're not using it already. All right, so I've got a great question by Mr. Patel. Brings up, he says, what about part-time traders wanting to do premium collection? Okay, there's 2 ways to do it. One is, there's 2 ways to collect premium as a long-term trader, or as a part-time trader. One is not going for a large amount of time. Okay, so bringing it down to the other side, and that trade is going to decay very fast. Okay, let's grab US yen because it has the most strikes. It's easiest to see. But as time goes by, this thing is going to go down in value significantly. Okay, like here's a 98 and there's a 99. So as an hour goes by, it loses value. If the market moves in your favor, it loses value. If I went short on this contract, let me get rid of the out of the money's in the money thing. Let me just reset. Okay, so if I went over here and let's say I try to find you a good example. Okay, let's say I bought this contract for 90, which would be way too cheap. You should be buying it for definitely less than that, even for premium collection. Then time will decay very fast. Okay, which is good. And that's the advantage of doing a closer to expiration binary contract. But what if I want to do daily, or I want to do weekly? Okay, maybe I just want to do once a day. 23-hour contracts. What is a way that I can do, binary premium collection? So, I'll show you one method, okay? And I'll bring it up and I'll show it to you. This is where you just put on one trade. You can do it maybe a couple times a day, or you can do it on multiple instruments, whatever you want to do. And let me bring it up. And we'll use US yen as an example since we already got it open. Okay. And let me throw a couple things on here just for drawing purposes. Throw in the range. What this is, this tells me the expected range, high to low, for any period of time I want. So 1440, which is basically 24 hours. Okay? And then I'll throw on I have what's called deviation levels. That's where I actually use the implied volatility, the expected movement built into the binary. Remember we talked about how they build that expected movement in. That's why the euro dollar is so cheap when you get far away, because there's not a lot of expected movement. So we actually take that number out and feed these in. And let's plot it. Let's see what we got. Okay. And then let's back out. And let's just see how accurate this is. So give us a range, 1 to 1.5. We're basically looking at the entire high to low range. Is it staying really within one expected range? each day. So here's the most we expect in a given day, this orange line, and this is how either far away from the low, which is the red line. Okay, so I get pulled back up from the low, or how far away from the high. And then you can see the actual plotted channel on there. And each day we're staying very well within that expected range, which is what we want. This day right here, what was that, last Tuesday? Yeah, that was, different days. I mean, every once in a while we're going to break outside of it. But what is a simple method for determining expected range? And so you could either use deviation levels, or you could use the expected ranges, or you could tie both together. So, like right now, we'll have new deviation levels here in about an hour for the next day. But let's see here. Let's figure out what was a deviation for a day on US yen. Let's go about 50 pips. And then what's an expected range? What's the expected range for the upcoming day? Let's see here. It ought to be pretty similar. All right. About 60. So basically within that range, 50 to 60 pips. So what I do is we'll go 50 to 60 up or 50 to 60 down. And that's between now and tomorrow. Okay? So I'm going to scroll way down here. And the latest I get is 3 p.m. And, well, that's Friday. That's Thursday, so whatever. Okay. Let's see here. We need to... fix that. Okay. Anyway, so looking at this... Oh, it is Thursday because we had Good Friday, don't we? I was like, why does that say Thursday? We don't expire on Thursday. But we have Good Friday this week, so the market's closed Friday. Well, I think there's an error. Okay, so right here, this is basically at the money. It's about where the market's at right now. Market's at 101.95, so pretty close. And so we can look up and down, as much as 50 pips if we want to. So this would be like 50 pips up, and this would be, about 50 pips down. Okay? Really a lot wider than I'd want on a binary. I'd like to get at least $30 on a binary butterfly, but you can use the ranges for that. My preferred strategy would actually be condors on the trade. So iron condors. And that's where actually, instead of using the binaries, I would actually use the spreads to do the trades. And there's a lot more premium built in. The break-even's a lot larger. So for when you're using longer-term expirations. So I'm actually looking, because I don't know if it's going to go 30 up and 30 down, or 60 up, or 50 up, or 50 down. So Patel, I'm actually looking at the range up and the range down, because you can't pick. It'd be nice if we knew, right? But we don't know how far up or down, if it's going to go, 30 up, 30 down, or 50 up, or 50 down. So if you want the safest strategy, you usually want the one outside of that for as safe as you can get to be able to do the actual strategy. You can also leg in, so there's a lot of ways to do it. But you can see more often than not, the market stays easily within that range. So you get a very high, good probability setup trade. You can see, we're basically saying it's not going to bust out. Majority of the time of these levels. And every once in a while, boom, it does. So, but the majority of the time it does not. And that's really what trading's about, isn't it? Probability. So, putting those probabilities together, making sure you have that profitability risk management with it to manage it. As it oscillates, take profit. Don't leave the thing on there. If it goes down, you may be able to take profit, and then it moves back up, you can take profit again. You don't have to leave it. So, yeah, so a butterfly, an iron butterfly. Iron means to basically collect premium. That would be where you'd be buying. So this is a little survey for you, but buying, like down here. So you go and you'd buy a strike lower than the market, and you'd say, sell a strike higher than the market. So let's say we were doing it like right at the ranges, okay? So like right there, you'd be buying like a strike right around here, and you'd be selling a strike right here. If it stays in between the ranges, you make money. And that's like over 23 hours. So I could also go in and redo the entire thing. I could actually look at a week, unexpected movement on a week, and do the exact same process for weekly binaries. So having the expected movement built in will help you a lot. So I'm pulling these trades off. Now, one of the most important things on range-bound trading, let me show you this, something we've been playing with a lot lately, is actually not just the movement, but the expected close. Okay? So if I go over here, and I'm going to add in the expected range, but I'm going to choose, instead of choosing high to low, okay, oh, it's a little bit too much, I'm going to choose like close to close. I'll hit OK on here. This actually shows me the expected from yesterday's close to today's close. And that's a little bit darker box, okay? And is often even more accurate than the ranges. But this shows me not only how far do I think it might move, but where do I actually think it will close at. And you can see right here, we said it will close right at this level, and look at where we're at this moment. You know, shorter days here. So you get the whole Sunday session thing going on. But then again and again, like right there, there's the close. Okay? So I definitely want to be outside that close to close section for a range bound strategy, because I expect it to, you know, be somewhere inside this. So I want to be like buying below and selling above it if I want to get a little bit more aggressive on my pricing. Now there are days, but look at the day right here where it breaks through it. It doesn't matter what you did, the thing was going. Okay, there was just no saving that. Okay? And, you know, look at news. Just, you know, a lot of times that's just news driven, so it can be pretty obvious up front. But you'll notice again and again, there's just this darker green and red shaded area here. Now, more often than not, it'll actually expire inside that zone. So that can help you really tighten up your strikes for what you're selecting. If you want to get a little bit tighter strikes, a little more aggressive strikes, and you know, pretty good risk reward scenario as well. But you can see like right here we have this range. So this would put us at, let me put my crosshair right there. Range is, where are we at the moment? 102.35, and right here we're at 101.52. Okay? So now I can go back over to the scanner and, you know, can I get closer now? Yeah, I can do this. That actually put me inside that range, be a little bit better. So sell that one, and, you know, buy this one. Doesn't seem like a whole lot, but we're bringing in $19 on one side, $11 on the other. That's a $30 profit. Now, who can tell me? So this is actually really important for this. Who can tell me what the binary is worth? You know, not accounting for bid-ask spread, but what the binary contract's going to be worth if the market were to hit, say, 101.60. What would that binary contract be worth? $50, yeah. So let's say I bought this for $80, and it goes down to $50. All right, because the market dropped to 101.60. USDN went down to 101.60. I'd be down how much on this? This $80 one, I'd basically be down how much? $30. I'd be up how much on this? Pretty much the full amount, like 10. You know, maybe less, a little bit of that spread, but about $10. So how much would I pretty much lose on this trade? If I got out of this one at 50 and I made the, you know, most of the profit on this trade, I'd basically lose about $20 on the trade. But I have the potential to make 30. So my risk reward, if I get out when the strike is hit on both sides, is actually very balanced. And that's a daily binary contract. That's a nighttime trader strategy. So saying, no, that's one you could actually do. You could put a trade on. You know, it's a very cool way to trade on Nadex. You can even do the same thing on weeklies. So, as far as you know what to do on weeklies, what you really want to do is you want to make sure you line up the expiration time with your expiration. So, Robert, if you were in here and you were editing this, you know, you can ask me offline, a little more detail on it. But we want to make it like end where the contract ends. So let's say you're using 3 p.m. expirations. They start at 4 o'clock p.m. So what I would do is I'd say, okay, 4 o'clock is, 16 hours into the day. Okay? So if I go, 16 hours in, 16 times 60. If I just start that at 9:60, and they run for 23 hours, right? That's how long the daily contracts last. So we got 9:60. And then they last 23 hours, so times 60, that should be 1380. Okay, so right here, And I usually have to play with this a little bit to make everything line up. But and what I mean by line up is just line up the start time and end time. But yeah, see, like right there, we closed at 3 o'clock. See, that's what I want, right? I want to close at 3 p.m. So that way you can make everything line up with the actual closing time on Nadex. You know, and you can adjust these over and over again to make them line up with whatever. You know, if you're trading 11 p.m. expiration, 7 p.m., 3 p.m., whatever. And then weekly, you do the same thing. You want to make it shut down at whatever time the weekly shuts down. So say 3 o'clock on Friday. Then you just need to make it line up to how much time do I expect between now. Okay, now if you're doing Sunday, you do Sunday and Friday. You do Monday and Friday. You could do, you know, like, so right now, like how many minutes are there till the end of the week? And so you'd want to. That's what you'd want to do is what's that range of expectation. So you could actually do them on weeklies also. Again, a part-time trader trading strategy. All right, so Patel says I'm risking 90 to make 30. No, you are not. Okay, because to say you're risking 90, you got 80 risk here, and you got. I'm trying to figure out where you're getting $90 risk from. Understand it cannot expire both above and below both sides at the same time. Is that correct? Like, can the US yen expire below 101.60 and above 102.40 at the same time? Yeah, so one of them is going to profit. Like, well, unless you close one out for a loss and hold on to the other one, then both sides could lose. But if you close both sides out or left it alone, at least one side is going to profit. Okay? So that reduces your risk. And if you don't want to take on the $80 risk, you want to get out when it hits your strike. So when it hits 101.60, I'd want to be getting out of the trade at 50. So taking the $10, you know, whatever, so profit on there, and looking at about a $20 to $30 loss on a $20 to $30 profit potential. So exactly, Michael. Yep. Okay, so that's sort of a little longer term but part-time trader strategy. You know, one of the topics was how does a part-time trader do it? Just range-bound trading. Very, very simple. Okay? And it's more likely to move and to come back more often than not. Just like we saw when we looked over here. We saw it hitting that close to close again and again and again. Every once in a while, yeah, it broke out. But the majority of the time, we're able to stay inside that close to close section over and over. Okay? So that's one strategy for you that you can add to your list. Okay? Another one is news. And we're going to talk about volume here in a minute. Volume is the one that's active. Okay? Like you want to sit down and like hammer it at night. That's the volume strategy. Okay? News, you go over here, check out the news trading plan. And I walk through, and again, this is free for you to check out. I walk through a bunch of strategies, you know, neutral, new time, you know, Aussie dollar. We don't expect the market to move more than 30 pips. 10 out of the last 12 months, it hasn't moved more than 30 pips. So, you know, trade worked out. Great. We got a lot of neutral strategies at night. And we actually usually do spreads. Not binary butterflies, but spreads at night. And so let's talk about the spreads for a second. Okay? Now, some of y'all I know you're like brand new. And you're like, I don't even know what a binary is. I don't know how it works. Okay? What you want to do is you want to hop over to education. You want to go down here where it says Nadex tutorials. And just getting started, platform videos, how do you execute an order, what is a spread or a binary? They're completely separate types of contracts, okay? They have nothing to do with each other, okay? Except for they're both traded at Nadex. And then some contract spec overviews. This right here will get you up to speed where you actually feel like you got a pretty good handle on things, okay? Where you can understand what do we mean by get in, get out, take profits, sell first, buy second, buy first, sell second, you know, all those little things. This is going to get you up to speed the fastest way possible, just on the basics of Nadex. But over here on the spreads, which are my favorite premium collection strategy out of everything. You'll see me do them on the air all the time. I'll do it before FOMC. I'll actually range-bound trade on FOMC and NFP. Love doing it. And go in here and I'll pick out a trade. Now, right now, we don't have a whole lot because there's not anything major happening yet. We'll have pound. We'll have some stuff to look at, but that'll be after 11 o'clock, so I can't look at it right now. Like crude oil, I'll go in and I may look for a potential neutral strategy on it to see if I can find something that could work. So let's see, like right here, I can make $56 on that side, and I could make $68 on this side. So sort of backwards of how you'd normally look at a lot of the trades. But it's a pretty cool way. Crude's already moved quite a bit. If it was in the center, it'd be a little bit easier. But it's like a 5-point move, decent move. On crude oil, or if it just stays in that range, I can trade it. So, but my favorite time to do these is actually before news, when the implied volatility is really inflated, the premium is really expensive, and people are always going, man, it's just too far, man, it's too far from the market. This thing can't make anything when it moves. I always lose when I do those. Yeah, you should be on the other side of the trade, buddy. Like, if it's not working for you over and over again, maybe you should be doing the opposite thing. Okay? So, we talk about iron condors. It's actually in the news plan up here, and I show you how to do that. They're great. I love doing them all the time. And right down here, so you'll see like all these green ones, those are iron condors. All these yellow ones are straddles or strangles. Or NFP, I'm like either do a straddle strangle or do an iron condor. So, and a lot of these are in the evening, 6 p.m., 6 p.m., there's not a ton of them. So it's one of those strategies that you add to your playlist, but you can't live on it because there's not necessarily enough of them to do every single day. But they're definitely worth learning how to do. And if you go back to March, I'll move this over later. But I actually have a whole training on how to do iron condors. I did some on the air. So there's an iron condor, one of my radio shows. I walk through it. So a whole list. And how to catch up on spreads. If you don't know what spreads are, like watch that webinar. About an hour and a half. You will understand spreads. I go A, B, C, D through spreads. Okay? Then I teach you how to do iron condors, and I actually show you like working examples of iron condors on the radio show. So an iron condor would be using the spreads, the range-bound idea, Josh. We have it sort of intermixed. We're building unique, step-by-step courses now. That's actually something we're just starting to build in. We've just been doing like education on everything Nadex. So like now, this is like one specific trading strategy. What is it? How does it work? How does volume impact it? Notes about FX volume. Nadex trading pit. Tools and essentials. Chart templates. Phase 1, phase 2, phase 3 of the trade. You go step by step, and then you have like quizzes. That goes through it, and like a certificate at the end, and it links you to everything over here. So we're building like a step by step, but it's all in here. If you don't know where anything is, just ask, and the general forum will help you out, and we can point you to a specific video. But we're like I said, we're building more and more specific courses. But the range bound is really cool. It's very simple. It's very relaxing. It's amazingly great on news, which you would think it'd be the opposite. But the reality is there's so much premium built in that a lot of times it's better to range-bound trade than it is to straddle or strangle the trades. So I prefer it on spreads when you're doing longer time frames. I prefer it on binaries if you're doing really short time frames. Like say 30 minutes or an hour to expiration, binaries. You won't even be able to find spreads with any premium minimum with only 30 minutes to an hour. The advantage of range-bound, Samuel asks, what is the advantage of a range-bound strategy? The advantage would be you can go to something else, or it depends upon what you have in place, but the main advantage is you're making money on time. You don't have to be right about it moving up or moving down. If it doesn't move up too much, or doesn't move down too much, or if it doesn't move at all, you profit on the trade. So that's the advantage of a range-bound strategy. When you think at night, what usually happens at night? A whole lot of nothing. Okay? So, if we go in here and look at... Let me remove these off. I got all this big time, levels here. But if we go in and look at expected range again for the evening... And this is like how far we expect it to move each hour. Notice, it's really spot on right there. But, it's not that much. It's pretty small moves. I can go in and I can actually measure it out. But I'm looking at 8 pips that hour. Expectations 9 pips, 11 pips, 12 pips. So knowing the actual expected move of each hour, you go, hey, can I get a butterfly on for that amount? Or maybe 2 hours, butterfly on for that amount, then I don't have to be right about picking up or down. And I have profit potential on both sides of the trade. So if one side does lose, the other side helps offset that loss. Okay? But that'd be the advantage. As long as it stays in that range, you're good. And I mean, just look at the past, 24 hours here. How many broke out? And we can see it's actually one broke out, and it actually came back inside on top of that. So, back inside that range. So that is one way to do like hourly butterfly. So if you want to trade at night, that's a way to trade. A very simple way to trade that you can check out. Okay? And then, let's see here. So we got some range-bound strategies that you could do on a weekly basis. You could do on a daily basis. You could even do them on an hourly basis. Personally, like the weekly's cool. The daily's cool. I like the news a lot. I prefer hopping in and doing stuff in an hour or two. Because I'm like, why wait an hour? Why wait a day or a week to make what I can make in an hour or two? So, sometimes the answer is I just don't want to sit there for an hour. I want to put the trade on for 5 minutes and walk away. Maybe that's your answer. So, personally, I would rather sit there for an hour and be done with the trade as put the trade on and be checking it over the next 23 hours. But it all comes down to your trading personality. But you can literally put it on and, start it off. Unfortunately, you can't do spreads at the beginning of a week because spreads only have, at most, 23 hours and 15 minutes till expiration. They don't have weekly expirations. Okay, so now let's go back over here. Spreads that are available at night. Let's talk about that real quick. Short, simple topic. Okay. Really, I mean, most of the markets, besides like corn and soybeans, and limited hours on the international indices. But pretty much just about everything else is open, as you can see. Okay? As far as expirations every hour, all your FX except for some reason, I don't know why, they haven't added Aussie yen and Euro pound to the spread list yet. They don't have those available at all yet. But we have it built in the scanner that as soon as they turn them on, it'll pick them up. But they literally have expirations every single hour. So you can also directionally trade or potentially neutrally trade. The only time you're going to do neutral trades on spreads at night is when there is a lot of implied volatility from news. But as far as the margin, I mean, it's insanely awesome. If you go in here and you're putting on a trade, I don't know, let's say you want to trade anything. Let's say US yen. Okay, so we talked about that a lot already. So let me drop all these off. Okay, I can go in here and I can put on trades for a lot less crude oil. A lot less money than I'd have to put up in margin if I was actually trading this contract with Forex spot market. So, $10 at the high end, like 75. I mean, you wouldn't trade that contract because there's no benefit to it. But if we'll just put 1-to-1s on here to make it simple. I mean, $7, $8, that's your margin, that's your risk on the contract. So just make sure you have enough time till expiration for the contract. We talked about this a lot in the last few weeks of the webinar recordings we did. If you didn't catch those, make sure you do go back and catch those webinars. But we talked about making sure you know about the proper expectation of movement. Because what if the expectation is 9 pips? You might need to look at 2 hours out or 3 hours out. Okay? But really low risk. I mean, can you imagine if you're an FX trader putting up $7 to control a mini lot? Because basically you're making $1 a pip. Okay? Euro dollar. I mean, if you've ever traded FX, you've traded Euro dollar. So, you go in here, I mean, $7 to control 10,000 units of currency, which is equal to about 13 or 14 grand. But only have $7 of risk to make $1 a pip. So I mean, it's insanely awesome leverage. And you can do the hedge strategy and all sorts of stuff using the spreads that I teach. So that can be done at night. Not a lot of volatility at night, so not necessarily my favorite thing unless we have news. So, the biggest thing you want to do is you want to figure out, question I got from Patel. A lot of great questions, man. You're shooting them off. That's great. And anybody who has questions, make sure to put them in here. So in a sideways market, specifically during the silent hours, like 4 to 9 o'clock, when there isn't news, right? Side note that. The one thing I want to know is how to find out when it will start spiking up so I can get out of control to exit it. Well, one, just making sure you have like a stop exit on there somehow. You know, being ready, have the ticket open, have it filled out, so you can just manually exit it when it hits that price. So there's different methods and ways to do that, but I mean you can literally just open a ticket up and have it filled out and ready to go. You just hit submit if it gets there. The other way, the way that I like to use, is actually expected volume. Okay. And this is sort of getting into that more active trading strategy. This is, how we do boomerang strategies. And so what you can see on this is right here. Let me go ahead. We'll move this up here. Is when we exceed expected volume continually, especially by a lot, early in the hour, even more so, that's often when we expect to exceed the expected range. Okay? And let me go ahead and add on again that expected range, but the close to close this time, but the 60 minutes. And you'll see a little pattern. Okay? So now that we got that opened up, okay, don't really need to see the plot on it. Let's bring this on down here. There we go. Okay, so like when I'm not really exceeding expected ranges, right here, so the expected volume will precede price. We have a whole webinar or video, it's about 20-30 minutes in here about it, basically how volume works, how the market makers, not market makers, but market movers move markets. And I go into the dynamics of when you should expect the market to move. And that's what is volume? It's like a 30-minute video, okay? And but when this volume exceeds price, that's when I expect the market to keep going. And so as an example, looking right over here, if I just narrow in this, we'll just get rid of deviations and just focus on expectations, okay? For the moment. If the volume is exceeding the expected volume during that 4-minute period of time, I actually trade on 4-minute periods for doing binaries because they're time-based, okay? They're very, especially when you're doing like in the money or out of the money, I mean, you got to make sure you do have that time recognition factor. Or we have the ranges on the diagnostic bars, either way. But just for a simple method, when the expected volume, so the expected volume was 316 contracts. And we're actually looking at 6J. We're not looking at the US yen tick volume because that's not real. You want real futures volume. So when the expected volume, 316, was exceeded, we had 615 contracts. Okay? And the next bar, that high of that bar was broken. Thinner so it's easier to see. So when the high of this bar right here was broken, then I got a simple buy signal. So again, volume exceeded expectations. Okay, right here. And then the high of that bar was broken. So we have confirmation not only of volume, which precedes price, but then we also have a confirmation of the momentum of price breaking the high of that bar. So in this bar right here, it breaks the high, so we get in right when that happens. Okay? And then I expect it. Now, I don't expect it to move this high. I don't know it's going to. But when I'm looking at that, I do expect it to move, the range. That's my expectation on each hour, that it'll move the range from high to low. It may not move it every hour, but I want to have that expectation. And so I set a take profit. And I can go in for an out-of-the-money trade, usually about $20 to $35. And, go for close to a 1-to-1, ideally a $20 to $30 profit on the trade. So I get in and I get out. I don't hold on to it. Now, if you're doing a range-bound trade, so on this trade, you probably have been in and literally out, like right there. So, like if you set your take profit, you bought at 30, you set it sell at 60. You probably have a contract right about here at about 85, and you probably got out just when it surpassed it by a couple ticks at $60. Pulls on back, so we get a little reversal going on, and so this is where I'd expect the market to go back, down. Why? Well, because the two things happened. One is, again, down here, volume exceeded expectations, okay? The bar closed in the opposite direction of the trend, right there. And then this bar right here broke the low of this bar that we're on, what we call the reversal bar, the bar that closed in the opposite direction. So I go in. On that trade, I'm usually doing an in-the-money contract. And it pulls on back down. I get in the trade. Okay, go short, take profit, 20, 25 bucks later. Just quick, in, out, done. But then you get another volume exceeding, and this explodes. This is also why we take profits, okay? That right there, that was unforeseeable unless that was news related. Okay, or time of day, like 8:30 in the morning. So, but that right there would have been very difficult to spot. Now, the good news is by understanding the ranges, let's say it just, flew, like in seconds up there. Okay, like there's no getting out of the trade. The thing's at like 95 now. All right. Again, understanding the ranges and looking at the volume. So it explodes up. Remember, what do I want to do over here? If it broke the high, I buy. If it breaks the high, it didn't break the high of that bar on the next bar. So right here, even though we have this massive volume breakout, this bar didn't break the high. That gives me some confidence the market may pull back. Then I get a reversal bar. Okay, this bar right here is closing down. Okay, with volume exceeding expectations again. And then the low of that bar is broken. Right here, this bar breaks the low of the previous bar. And so I'm able to go in and go short on that trade. It expires right here on this hour. Okay? And again, whenever I do a reversal trade, I usually choose a in-the-money contract. So, I would have had a contract or at the money or in the money. So somewhere around here in this zone, I would have chosen my contract to sell. And so it came on down, sort of went up, came down, up, down, and then dropped on down at the end and expired in the money. So by using all this, so that was a core retail sell. So actually you had a clue on that trade, is you had a retail sell, so it wasn't the wisest time to do one. But even with retail sells, if you would have got hit on that, which you could have taken profit, let's say if you would have got hit on that, you had 1, 2, 3 trades built in to that 1 hour. Now that's during the day. We go and we look at night. Okay, so we'll scroll over here. This is tonight. Okay, is where we're at right now. The market goes in. We're not exceeding expectations at all. It's just a flat night. Okay, nothing's happening at all. Market finally pops up. Okay, we get a big exceeding volume bar. We're outside this close to close range here. Okay. And so with that, I'm expecting the market to potentially go back down. I do get a down close on this bar right here. This is, I'm simplifying it, okay? But right there, my down close is actually the following bar. So right here. And volume was exceeded above the expectation on that bar. I get the down close. This bar does break the low of that bar. Again, making this very simple, but you basically got a short trade, and I'm looking at a trade basically at the money, in the money trade right there, and it expires right here. And all we're doing is looking at how far do we expect it to move, when do we expect it to reverse, okay? Basically, once it's moved about 75% or more, closed in the opposite direction, and volume has exceeded expectations. Those 3 things, that's all it is. So 75% or more, volume exceeds expectations, close in the opposite direction, and then break the low. So I guess you could say 4 things. So then break the low, that's our short trade. It's an in-the-money trade, usually at the money or in-the-money trade. Usually looking at about a $40 profit goal. Realistically, probably about $25, because we'll get in and get out and take profit. So when a winning or a profitable trade doesn't become a losing trade. But you can do this like over and over and over again at night. So it's the reason that the system was invented was I had so many traders asking me. I trade during the day a lot, but we have so many traders that want to trade at night, and so I worked with one other trader, and then brought in another trader, and then another trader. Like all of us came together, and we kept working on this for months. Just a very simple strategy. So, okay, how can we use volume because there's so little happening how can we use volume to help us? How can we use expected ranges during these slow hours? I mean, expected movement of 10 ticks, okay? And I mean, if it got there, it actually got exactly to 10 ticks from high to low. So went down a couple, went up 8, so it actually hit the exact expected range in that hour. That's when we had that reversal trade. It pulls back down, and that's the beauty of the in the money binary options is you can actually choose a little bit in the money on the trades. So yeah, the Aussie and Euro Pound, that's correct. You can trade them now on the binaries, but not on the spreads. So, but yeah, so you can definitely trade. Yeah, you can trade Aussie, Yen, Euro, Pound. Yeah, I wouldn't say in the binaries. I was saying the spreads they're not available on yet. So, Patel, basically, what I'm trying to help you out on in this is if you're watching volume to know when they're going to go against you, because this will actually alert. It'll say, "Hey, volume alert." If you're watching volume, then most often when you do get that big volume movement, it's gonna. I'll be looking for that trade to happen. I mean, it's like going up, 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 like right here. Okay, we're getting near this range. It expired like right at it, but it's moving up. I exceeded volume. It's breaking the high. I might hop out early on that trade. I mean, that was it actually still profit. The trade, if you would have had your butterfly at the high and low of the range, still could have been a profitable trade. If your strike was above and below that range there, because it came back in and it expired. The last bar is this is the close of the hour. But I mean, that could have been your heads up. Like as soon as this got broken, you're out. So if you're doing a butterfly, to basically say, hey, I got a long at this point, going into the top of the range. Maybe I want to not be in this trade. So now I wouldn't expect it to go far because we're at the expected range, but that would be really the only clue you could have that it's going to break out. So the biggest thing is just limiting your risk. Patel, that's the number one thing you can do on these. If you can limit your risk, okay, by getting out when it hits the strike, then the probabilities start adding up. If you just leave the things on, it's not even about knowing that it's going to go up. It's just limiting your risk if it does. Let's see here. Yes. Do I trade futures based on the strategy? I do. So my favorite strategy actually on futures is it's called the Apex strategy. It's where we sort of got our name, right? And I just trade this Apex pattern right here. So short, long, and then I hedge with it actually with the spreads. I love actually hedging my futures and forex trades with spreads. That's my favorite. If anybody asks me what is your favorite strategy of all, that's it. So it's where I combine spreads with futures. It's actually the first strategy I came up with on Nadex years ago, and it's still my favorite strategy to this day. And because you have insanely low risk. Like I did a trade on the air the other day. We had the $35 risk, and it's like a $4.30 profit, or something like that. And that was combining futures with spreads. So it's pretty sweet. But you have to have a larger account. You have to manage two different things. You have to do a drawdown of one versus the other. It's more complex. Something you grow into, or if you're already a futures trader, it's something you definitely want to embrace right away. But let's see here. So Michael, you put a question. Same as step one boomerang question mark. Can you fill in what you mean by that, so I can accurately answer you? And let's see here. Let me pull this out. I want to see what other questions we have. We're going through. So you get a little idea. I mean, this is, and I have searched high and low to find a good nighttime strategy, and this has really been it. So this has been awesome. I mean, between the range bound, the iron condors on news, but the problem is news isn't always there. But using this volume and the expected ranges really opened up the nighttime section for us. We actually have traders, pretty much every night, and they're trading. So these are trades on the current hour, actually, Dozy. So we're actually trading current hour every hour. So when we do these trades, well, I mean, if there is a trade. So, but it's pretty much almost always the current hour. So the only exception would be sometimes we get in a little bit early for the next hour. Like if it's like 8 minutes to go or 7 minutes to go, we may hop into the next hour's expiration. Yeah, go to the course, Michael. Volume is one of the confirmations. So you want a reversal bar, you want volume you want expected range, and there's basically four things: volume, reversal, expected range, and breakout of high or low. So there's like four things, but we cover that in the course for you, and it's free. You can check the course out for free. So yeah, we do nighttime trades, EA. Like right now we do them. So we send out a couple a night. I mean, there's not near as many at night. So, but yeah, we'll do a couple. And now in the room, there's a lot. So, but we'll have about 10 to 50 trades a day, usually in the room. There's about 8 trades per 8-hour session on any market. Like doing this whole range-bound volume back and forth strategy. It's boomerang is the name of it, because basically it's like you throw the boomerang. It's like the launch. That's like the trade where we take off. We go with it when it goes up. There's reversal. The boomerang comes back to you. And then there's continuation. That's when the thing just takes off. So it's usually news related. And some traders call that a stick. It's like, what do you throw a boomerang? When you throw it, it doesn't come back. A stick. So we got like phase 1, launch. Phase 2, retracement comes back to you. And phase 3, continuation. It just keeps going and going and going. So, Michael, yes. So yeah, we'll be separating all that stuff out. And then, yeah, if you want to take it, yeah, it's free to take and check out and learn right here. All of our education is always free. It's Education Boomerang Binary Trading System right there. Okay? And let's see here. So yeah, it's a little more active. So strategy. But you don't have to be trading for 8 hours. You can sit down and trade for an hour or two. One of the things I've been doing today, my most profitable trades today actually were trades that took about 5 minutes. And they were trades where I went in right before expiration. And I simply... Basically, I did it on Nasdaq mainly today, on the binaries, and just as an example, like one of the trades that I did, and I go in right before expiration, and I would see, here in the last 15 minutes, what direction is the market closing? Is it exceeding expectations? Does the market break that bar's high? It's like right here, volume exceeded expectations. It closed up, broke the high of the bar. We call this expiration premium collection. And that's it. Like, if it breaks the bar's high, I buy, I'm in the money strike, and I just hold. So now I'll get out $5 before. But, when I buy them, I'm not buying them deep in the money. I'm buying at the monies. So, today I think my fill was 55 or 60 on the contracts I got into. And that's a really simple strategy. It takes about 5 minutes. So, now that's if it's there. If it's not exceeding expectations in the last 15, I don't have a trade. But right there, nothing happened. Right here, it exceeded expectations. See that? The low is broken. Selling out the money contract right here. Close it down. Go forward, go back. Okay, premium collection. Okay, so right here, we're going in the last 12 minutes or so. Volume exceeds expectations again. Okay, so pick your at the money. There you go. Expiration premium collection with one indicator. Just exceeding volume. I go over here. Market closing down, volume exceeds expectations, breaks the low, at the money, closes in the money. So, you're talking, literally $50, $60 risk, about $40 profit, but in the money, and just about 10 minutes, and done, out. And like I said, they're not every hour. There was, right there, I guess there actually was a trade right there, too. So, yeah, we had one there where it broke the low, expired right there. So it's 1, 2, 3, 4, and then 5. So that's the daytime session. Those are premium collection trades during the day, but at night, you'd have to obviously flip over to something like US yen or something else. And it can be helpful on it. You hop over, you look at it, and see if you get them. Again, you're not going to get them a whole bunch because you have to have volume exceeding just in that last like 10 or 12 minutes. But this is actually how I do premium collection trades at night now, or even during the day. Is I'll just go in and literally just look for that one thing, and that's volume exceeding expectations there in the last 15 minutes. And if it is, sweet, got a trade. If not, then no trade. Let's see here. Go back. And all this is just using volume and expected ranges. You notice there's not, I mean, how many indicators, meaning average of the last 10 closes, moving average, etc., do you see on my chart? None. Okay, this is just volume and high to low ranges, deviation levels. Very, very simple. So it doesn't have to be complicated. But let's see. So if you can find one there. Okay, that one bust right there. Okay, so it just busted. As long as you're getting in the money, at the money right there. Okay, expired in the money. Go over. Too late. Let's see. So those are, now the cool thing about those are it'll announce when it exceeds volume. You can have open like every available instrument, like at night. So you could have open like the 5 and actually the 10 FX pairs if you wanted to. And you could check in those 15 minutes and just wait for something to say, because it'll actually say like, volume exceeded on US yen. So it'll actually tell you. Boom, you pull up the chart, you find that you have it selected on the scanner, click it, done. And the scanner will make it really easy to do, because you'll need the scanner to do it if you have that many instruments going at once. All you do is you go binary scanner. Let's say you're trading all of them, okay? Or let's just say for the non 7 and 11 o'clock, you had Aussie dollar, euro dollar, pound dollar, US yen, and euro yen. Okay, you're gonna do in the money contracts. You only want trades that are expiring really in the next 30 minutes. Okay, that's all you need. If you say in the money, 0 to 30 minutes, and the 5 contracts available, then it'll show you whatever fits that criteria. So right now it says nothing because it's 30 minutes 55 seconds. But if I bring it out here, there you go. So it'll actually show you whatever in the money contract is there. You know, in the money, at the money. If you want to get a little bit more specific, you could actually say, I don't want to risk more than, like at a minimum, you could say, you know, show me the 40 to 80 range. And then it'll show you, you know, all trades within $40 to $80 on those 5 markets that expire in the next 30 minutes. So makes it very easy. Like if it fires it off, you pop over, you're like, okay, buy euro dollar, sweet, okay, buy that contract, and then you just, you know, click it, trigger it, it pops up, and you submit it in. Let's see here. I want to master the box spreads, Nadex spreads. What expiration and trade do you suggest I start with? I'm checking out the Elite program. Yes, so that is how I trade the spreads. As far as like trading, mainly during the day. Okay, just because there's like 9 ticks moving on the US yen. I mean, how much are you going to get? So I would trade mainly as far as like a day-to-day, day-in, day-out trading the spreads. Yes, the Apex Elite strategy, or the Apex Elite strategy with the futures combined with hedging, either one, depending upon just account size. So you can even hedge with the futures. With the spreads, you can use a master spread and a under spread, or you can just use one spread and go directional. But yeah, that's definitely as far as like mastering the spreads for directional trading, but with defined risk and sort of simulating futures and Forex, spreads are definitely the way to go. Let's see here. Eric asks, Daryl, are you choosing a strike to buy at the top of the range and exiting at a take profit and selling a strike on the lower hourly range and exiting at a take profit, or when the strike is near? Okay, so do you mean like if it's like going up and I get what I call a P1, like a launch trade? I'm actually probably going to choose the closest in the money strike or out of the money strike I can get for about $30, because I'm just trying to make about $25 on that trade and get out of it. So I definitely want it below the range. The closer, the better. Okay, so the closer I can get that thing, it moves, I'm done, I'm out, I'm happy, it's over. I mean, I just want to grab my profit and move on. And I mean, I don't want like these $10 trades. So, you know, I work with traders on that all the time. Like, hey, let's try to focus on 20, 25 bucks. But let me reset. We'll go out of the money here in the next 2 hours on US yen. Okay. And so if I go in here, let's say I got a trade right now, which it didn't qualify, but let's just actually that one qualified right there. So this trade actually did disqualify. The low of that bar was 101.85. You know, and this is why I do out of the money, because I mean, out of the money is lower probability. So at 101.85, so I probably would have chose like the 101.83, which would have been a little bit cheaper at that point. Probably would have been around about around $70 where it is now. And then I'd look to take profit on the trade. So if I sold for 70, I'd be looking to buy back around $50, $45, somewhere around there, which means I'd have to get down to 101.83, and it already did. Like, it's already moved back down there. So you can actually see right here. So if you got short right up here, it actually went down to 101.82. So that shouldn't have been too hard to, you know, take some profit on to get, you know, $20 out of that trade. And if not, then you just have the order standing there, you're waiting. But so far, you know, all the volume is in our favor to the downside. So I would expect that trade, most likely, based on how I read the market, to, you know, move on down a few more ticks. But if not, we got our 5-tick move. And you only need about 5 ticks to take it. To show you what I'm talking about on that, I mean, look at the difference in price. Okay, there's 5 ticks between these two strikes. Okay? 101.83, 101.88. Okay? That's what that means is a 5-tick down move would take that strike from $71 to $38.50. So that's, you see why I love the US yen at night. But because those tight, those little 5-tick wide strikes. But I mean, easy $25, $30 on a 5-tick move. That's all I need, and I'm done. See, one example of an EPC at night. Need to pull them up. Let's see here. None tonight so far. On US yen. Let's pull up pound. Pound has some volume on it. So on the P1 trades, out of the money for limiting risk. On the other ones, I exit if it moves. Let's see, pound right there. Okay, that would have been a trade, but it didn't trigger. I'm glad it didn't, because look at what happened in like the last 2 minutes. That's one of those EPCs that kills you. Check out right here. We got a low of 1.6721 and a low of 1.6721. See, I always, when I get that volume confirmation, I always make it break the low before I get in. It didn't break the low, so I didn't get in. I would have got in that trade. It would have went down. I would have got nailed. And I didn't get nailed on it because it didn't break the low, and it flew up right at the end. So that's why I follow the rules. I want that momentum and price. It's like I may give up a couple bucks, but it is worth it compared to what I lose if it goes against me. We'll check out some of the others. Let's see. We'll go Aussie. Okay, over here the Aussie. Nothing last hour. We can check out Euro, but that's unlikely. But we'll look. A close out of the money for the phase one for the launch of the boomerang. Now for the expiration premium collection, I'm doing an in the money trade. So that's definitely an in the money contract. Let's see. There we go. Okay, there's one example for tonight. I mean, it already happened, but because we have to be in the last 15 minutes for me to show you a live example. But right there, we volume exceeded expectations. Okay, 8 minutes till expiration. Price broke the low by at least a tick, and then we buy basically the at the money in the money contract, which anywhere in that range, and went down, shot up, but still stayed below right there, and therefore we get a profitable trade. So yeah, I definitely want it in the money binary. Doesn't have to be by a lot. I mean, you'll see. I'll trade trades like in the money, like a tick away in the money. But in the money doesn't have to be 20 ticks or 5 ticks away. I just need volume confirming my direction of my trade. And then I'll exit though if it hits my strike. That's a big thing. Okay, so if I go and I sell at 60 or whatever, and it pops back up, I may have to get out like at 45 or Sorry, if I sell at 40, pops up, I'll buy back like at 55, 57. So I mean, there's like $20 on the trade, but let's go in and get out. Don't hold that thing into what we call the dark zone, the last 2 minutes. When you can't really, it's not that you can't get out, but the market maker isn't going to be quoting, you're just going to see other traders quoting. So it's hard to get out in the last 2 minutes. So I try to get out when possible before that time. If I see anything that tells me that this is really iffy, then I definitely want out. Like if I see like volume starting to go back the other way, stuff like that, bars starting to close in the other direction, yeah, I'm definitely belling. If I don't see anything like really alerting me, and I haven't got filled yet, then that's that judgment call. But if you can get out at $10 profit, just get out. If it's your 3 minutes till expiration. And then let's see here. We are about to add on. Here it is. We just got this. Literally just got it figured out. And go over here to the Euro Yen. I actually just got this working for cross currencies. This just ticks up here. That's why you're seeing like 410,000, 41 million and stuff. It's like tick volume. This is actual futures volume. You want futures volume when you're trading Forex. You want the futures Forex volume. So what we're doing is we're actually pulling the futures volume to calculate. We just got it worked out to where we can now do it on all the crosses of Euro, Yen, Aussie, Pound, Canadian, Franc, Dollar, and New Zealand. Like any combination thereof. But yeah, so it looks like, that was a reversal trade right there. But we didn't really have a expiration premium collection. So you may or may not have a lot of them at night. There's just not a lot of volume. But if it happens at the right time, then you definitely can grab it. Just got to be there. Now you do have the 7 and 11 o'clocks. Like Pound Yen. We go look at that. Let's see if we got one over here. Well, there's it exceeded, but it didn't break the high. Let's see here. No, nothing on Pound Yen. How do you set the futures volume on Forex? We actually have built the indicator to automatically pull it. So there's a way to do it. You can manually add all the data series, make them transparent, add volume on. You don't get the expected volume. But we've actually made it where it's just programmed. It knows what to do. So say this is like use futures volumes for Forex, true or false. Oh, and you're going to have to update that because now we have more pairs. But it used to just work for the dollar-based pairs, and now we got it for like 27 different instruments that it works on. Which is pretty cool. Like we've been beta testing it all day for the cross pairs because we were trying to get it out as quickly as possible because now we have Euro Yen running. So with the Euro Yen running on Nadex at night, we're like, we really need this. We wanted it during the day anyway, but now that they have it every hour, they have the 8, 9, 10, 11, 12, 1, 2, 3, 4, 5, 6, 7, plus the 4 and 5 at the end of the day. We got to get this up. So, but yeah, it basically goes in without you having to pull all the stuff. And now the cross currencies, you really can't do it unless you have we built the formula in there to go in and pull from both of the FX pairs and put them together, and to help give us those expectations. But it's working well, so I'm excited. We just got it done, and which will have to, there's a lot of similarity. If you compare the two, they're close, okay, but they're not exactly the same. Like you see, right here, see all this extra exceeding volume we got? We don't really have that down here on the actual futures contracts. So there will be definite similarity, but the futures are a lot more accurate. So I want that accuracy, built in. The radio show today was live, Thomas. I was reading out live market prices. So, yeah, if you just go look at it, because I actually was covering CPI from this morning, and I was looking at covering pound dollar for this evening. Now, I don't know if you're listening at when I do the show. So I do the show at 1 o'clock Eastern time. So if you listen at a time different than that, they do replays like at night and in the evening and stuff like that. But, so yeah, if you want to watch it live, you have to actually be, logged in or tuned in at 1 o'clock. But yeah, they're always live. So you can call me on the air, and I'll answer your questions. So, yeah, radio show right there, 12 to 1 Central, 1 to 2 Eastern. And then the archives are right there. So time zone shouldn't have mattered, because unless they double played my show, which would be pretty weird. But if somebody wasn't on today, they could have played my show twice. So, Steve, you should have it in the next 24 hours. Yes. So, did you just say we have real volume on cross pairs? Coming to a toolkit near you. Let's see here. Yeah, we don't send it out. You just click on a button and it updates. So it's pretty simple. See here. I'm trying to find an example. I'd love to pull off an APC. I just don't know if we're going to get one like right at the end, because there's no way of knowing if volume's going to break out. But we'll use, we'll see if it happens. And we'll have to shut it on down. This webinar went a little bit longer than expected. Hopefully y'all got a lot out of it, though. The whole idea of this webinar was to just let you know, like, hey, there are strategies you can do at night. There's volume-based strategies. There are expiration premium collection strategies. Yeah, we're heading into a close. This actually could work. There we go. There's a short right there. All right, so it's going to be too late by the time I pull it up. I was not ready. But that's an expiration premium collection trade. In progress. So a little bit further out than I like. I prefer like the last 15. We're technically at like 17 minutes on the trigger, but we'll see here. What are we on? U.S. yen. 9 o'clock. Current market at 101.81. Yeah, let's see if there's a strike or not. Yeah, so we got like a 101.78. Not a big fan of that one. Just the price of it's not great. We lost a lot of time there. Value in that. And then you have an out of the money option, which I usually am not a fan of, because it's just the required movement. Unless we really have some volume, like confirming that it pushed that way. But this would be the premium collection trade. This would be like the double binary trade. But that'd be the out of the money. And that'd be the premium collection, $34, $85. So this puts it up at 101.83. We're sitting at like 101.82. It's really close. So I actually would pull the trigger on this one if we'll break that low now that we're inside the 15 minutes. So we got exceeding volume. I got to see it break that low. So there you go. How do I know the right strike to pick? Okay, well, one, it's got to break the low, because I want to wait for that 15 minutes coming up, okay? Two, it's actually pretty simple. I'm looking for the closest in-the-money strike with an acceptable profit potential. So, what's the low of this? The low is 101.80. I want a in-the-money strike, which basically means 101.81 or higher, okay? So what's the closest 101.80 or higher I can get? Or 101.81 or higher? Well, if it's 101.83, that's the closest in the money strike I can get. I'm going to grab that one at 101.83. And if it gets down to that price, depending on how long there is till expiration, I ought to be able to get at least $25 to $30 for it. Okay? Which means I could take a $20 to $25 profit on the trade before expiration if it does continue to move down. So that's how I would get in that trade. Does that make sense? On how do I know which dozy starts picking the strike? It's all about what strategy you're using. Are you trying to make premium collection? Like this is like a really quick 5-minute premium collection trade. Okay. Are you doing range bound, or you want it outside the range? Or are you doing directional? Are you doing a strangle? You know, Wednesday I'll be doing my Google strangle thing. I do that usually. I call it out on the air. So I love that one, and I trade that one. So, you know, what strategy are you doing determines really what is the best strike to use. You know, what's the best position to have your wide receiver in? Well, what strategy? You know, what play are you executing? So, it's all about what play you're trying to execute to which one is best. Well, that's a live ticket. Live account. Blue, not light blue. So, yeah, like all our trades, like signals, all that stuff are live. But, yep, it is a P2 entry. You are right. So, P2 reversal. But it would have to close up, and it'd have to break the high to actually trigger the entry. So we don't have an entry yet. Long or short. So if it broke the low, I would actually have an EPC trade going short. So this one right here, if it actually breaks the high, I could actually have a trade to go long as a P2 trade. When I say breaks the high, I actually mean the Nadex indicative. I want that breaking the high. And I usually give it a little bit of wiggle room, because notice how on FX the indicative is a little bit higher. Okay, because they're using mid. They're not using the last trade, because it's fair. Because, I mean, on FX, like the bid-ask is wider. So it's better that they use mid. So, like this is 848 and 84, and the high of this bar is 84, then I would really probably look over this. Okay, this is about the indicative is about a tick higher. So if 84 would be my normal one, then really 80, and that's a tick higher, 85. So really 86 would actually be my trigger entry. So I'd basically go 2 ticks higher on this, because it's 1 tick off. So if it hit 86 on the long side, I'd be in the trade. And I'd choose a in the money contract. So I'd go down here. And if we're looking at 101.84, and I'm looking at in the money, and that's basically going to flip me on the other side of the exact same trade. Because by the time it gets up there. So it's actually pretty sweet, because I can trade it short if it goes down, or I can trade it long if it goes up. Either way. So. Yep, if it breaks a high by 2 ticks, P2. If it breaks the low, EPC. So expiration premium collection. I don't care what way it goes. I don't have a bias. I don't care long or short. I don't have an opinion. I just go with it. Opinions get you in a lot of trouble in trading. I wouldn't use 2 tick distance on the lower side. I just make sure I use the indicative a tick lower, because it's already a tick higher. So notice how we're a tick inflated because of the mid price there. You know, maybe even 2 ticks inflated. It's like 848, 83, 84, 83, 84. So on the downside, I don't need that extra buffer. On the upside, I need that extra buffer too, maybe even 3 ticks. So say we're getting like an 83 quote, an 84 quote, back and forth, back and forth. So I need 2 to 3 ticks on the upside. I only need 1 tick on the downside, because it's already quoting higher. So by the time this thing gets down and breaks the low of this right here, 101.80. Now my EPC trade is over now that the 4 minutes is up. Okay? So my EPC trade, I needed to enter on that trade. So now I would actually have an EPC and a P2, both a P2 reversal trade. If it breaks the high, I'd actually have a P2. And I'd have an EPC, because I have a reversal bar, I have an up close, I've exceeded volume, but I got to break the high. So I got to flip that around. Now there is no short to trade on. Now there's only a potential buy trade. And so we'll just set this up here. Look at our max potential price that we'd be willing to buy at, say $80. So it's like the highest. And it's a limit order. So, if it's at 75 when I hit buy at 80, it'll fill me at 75. But I won't enter the trade until it's broken the high. Somebody just tried to put a trade in there. So you can see their order. Somebody's put a buy in it at 60. Maybe great, but maybe throwing away $60. So I don't know if they're on this webinar or not. But I wait till confirmation. Not waiting till confirmation will cost you a whole lot more money than missing out on a couple trades because they don't work out how you want them to. You can get in a decent price currently, but you also can lose because you have no confirmation. Boom, no trade. 4 minutes is up. I'm not buying. I'm not doing a trade. So I don't have exceeding volume either direction now. I mean, it's sort of a down close if you want to call it that. It moved one tick in the last 4 minutes. And it has to happen by the end of the close of that bar. It didn't happen, so I don't have a trade. So if I did have an order pending right now, I'd be canceling it. So I want to let the confirmation happen. It's just, yes, you will miss out on good trades. Who cares? Because you're going to miss out on a lot of bad trades. A lot. Okay? So let that confirmation happen. So like right here on this US yen, it went down. It really didn't break the low. I mean, that broke the low. So that one you could have got. But, I mean, that thing was close. Look at that. Okay? So now it's breaking the high. So now, yeah, you can hop in. It's already at $83. Probably not going to get filled anyway. I'd have to have it ready to go. I wouldn't really watching it. Is there any reason I prefer 4-minute bars? It wouldn't be a P2 either because the trade's over. So the trade had to happen in this bar right here. So no volume. I guess there's no trade. I have tried. I love diagnostic bars. You know that, Michael. I've tried 10-minute bars. I love 10-minute bars for finding magnet volume prices. Okay, like we did that webinar a few weeks back here on Nadex where I went through magnet prices because that's a very institutional size to be able to look and find magnet prices. I used 5-minute bars for years as a trader, and then a bunch of traders kept like, "Hey, look at the 1 and the 2 and the 3," and I'm like, "That's ridiculous." And I started looking at 4, and I'm like, "Wow, it's just a little bit faster, but it's just like the right amount of speed." So it's like it gave enough granularity, but without too much. Like a 1 minute's like way too granular, without being too far removed. Which like 10 minutes is too far removed a lot for actual live trading. And 4 minutes was like just the right frequency, and I've been able to use it across multiple instruments, and it's been working great. So yeah, just worked out well. And usually I have a lot more explanation than that, but really that's it. It's just we tried a bunch of stuff out, and somehow we landed on 4 minutes on a bunch of stuff. I think it's small enough to give you quick entries, but it's big enough to not just throw signals left and right. So, let's see here. I don't really answer a lot of subscription questions because it's more of an educational thing, just trying to go through like the ideas, the concepts that I trade with to help you out with that. You see why, by the way, I'm not in the trade, so let's pull one back now. Now your heartbeat's like going. But Elite subscription will give you access to, if you have a paid one, it'll give you access to everything, including the trading pit. So if you want the trading pit if you're doing boomerangs and stuff like that, because that's where other traders are doing them. They're not doing them in the Elite room. The Elite room is for people doing like spread trades and futures trades and hedge trades. So if you're doing that, that's the Elite subscription. If you're a binary trader, that's like the P3 stuff. Okay. But if you have any questions, I really can't get into. It's Nadex's webinar, so I'm here just to educate you on Nadex and how I trade it. So yeah, I do confirm off the indicative. Let's see here. Looking on over, what do we got left on the agenda? Okay, so we talked about binary contracts available, spread contracts available, advantage of nighttime news trades. So they're short, they're quick, they don't take a lot of time. Using volume, we talked about that. We spent a lot of time on that. Forex trading. Let me give you just a real quick summary on this. Okay, one, if I told you I'm trading something at $101.84, $101.84, you wouldn't be able to tell me if that was a stock or oil or an FX pair unless you knew. Okay? It doesn't matter what it's called. Okay, all binaries work the exact same way, 0 to 100. Okay, in the money, out of the money, at the money, it's all the same. I don't care if it's oil, gold, FX, indices, FTSE, whatever. They all work the same way. All the spreads on Nadex all work the same way. I don't care if their underlying is denominated in yen or euros or British pound or Canadian dollars or whatever. They're all $1 a tick on the spreads. All of them. Every single instrument. Drop the decimal, drop the name of the instrument, look at the chart, and trade the chart. It's a chart, it moves up and down, trade it. Don't get all caught up into what it is. Now, what it is helps you maybe as far as news, like when yen news is coming out, obviously it's going to have a bigger impact on yen. Okay? But don't get overly caught up in it. Okay? Because if you do, you're making it harder than it really needs to be. And there's no need to go there. There's no need to make it that difficult. And some people are like, "Oh, I don't understand FX. I don't get it." Just don't make it that hard. And it isn't. Basically, in short, it's not that difficult. So, let's see here. But yeah, we'll do some more evening webinars. So Eric, you're liking this. Okay, so we can do some more evening. We'll get a little bit more focused on them. But the main thing at the night was just to show you, here are some of the ways to trade in the evening. And maybe we'll do some over at Apex. We'll do some live trading nighttime webinars. We'll hop in and display some trades. Because obviously we're limited here. But that's probably the biggest lesson I give you on Forex trading. Is don't worry about the whole cross-currency conversion. Just call it the UJ. I trade the UJ. What's that? Doesn't matter. It's a price that goes up and down. Keep it that simple. Let's see here. What else we got? Eric, that was you, wasn't it? Yeah, you hopped in, got $15, got out. So, simple enough. Yeah, it popped up there. And then, can I explain the green versus a red expected range chart? The best place, by the way, to ask me questions is not an email. It is actually in the help desk. I get about 600 emails a day, and some of them just never get replied to. Not because I don't want to, just because they get lost. Right here under questions, go to help desk, and I will get that. Okay, me or Skelton will get that, and we will answer any question you have. Okay, so you get the fastest reply too, because I'll check my email like once a day at most. Because you can get sucked into the email vortex. So, okay, so green versus red on the expected range chart. Can you explain that real quick? Okay, I'm gonna answer the last couple questions. We're gonna wrap up. Yeah, basically green means how far is it retraced from the low. So notice as it's moving up, you see, red means how far is it retraced from the low. So notice as it's moving up from the low, you see red down here, okay? Green means how far is it retraced from the high. So notice as it starts moving further down, you start seeing green down here. So red basically is meaning we're expecting a sell signal when everything else lines up. Green means we're expecting a buy signal when everything else lines up. Same thing on the deviations. How far has it got from the low, or how far has it got from the high? So just think red means sell, green means buy. Like, it's not telling you when to get in, it's just that's the direction you're going to be trading if you're trading reversal trades. Okay? Charles, so did I. Thanks for the free $15. Oh, you guys hopping in. I'm like, I gotta break it by a tick. You're like, I'm grabbing it. It looks good. So I'm glad you all made some money on that trade. Okay. So let's see here. I was looking for maybe to pull back at the end. I was like, I wonder if we're going to get a reversal on that. But yeah, just closed right up, right inside that close to close again. So. And Sir Pippin. Oh, that's Eric. All right. So yeah, I gotta connect the names. Sweet. Yeah, check your help desk because I have a request from you or for you. Let's see here for Skype. Yeah, P2 and an EPC, so a little bit of a combo there. If you just would have had the volume confirmation, that's okay. You know, I mean, as you get better, you'll be able to modify it. The whole idea of a system is to give you rules to learn and have success with, and then build on it from there as you learn to read the markets. And then last question. So entry price should be the close of the reversal bar. Basically, the entry price is when the price breaks the high or breaks the low of the reversal bar. So, if you go through our free course on here, we actually walk through all of it for you. And then, like, we have traders doing this at night, during the day. Small accounts, big accounts, trading for just an hour, trading for, I see some guys lining up for like 14 hours. So, but yeah, it'll walk you through like step by step. And if you have any questions, I'll be glad to help you out. Okay? Yeah, it has to break the high by a tick. Or by a tick, or pip, or whatever. So whatever the high of that was, 101.84, I had to break it by 101.85. That's when I would get in. And also there's a forum. So we added that to it as well today. It's right over here. So you just click on this and it'll open up, and then you can ask questions. Like there's step by step. There's like evening with like a trader who went in, like took our challenge, traded at night and see what happens. He traded every trade. But you can go in, you can post questions and all that fun stuff on it. Do you suggest boomerang over MVP? I like boomerang better for the purpose of getting trades like every hour. So you're going to trade a lot more often. It's also easier to get strikes filled. MVP works great, but you got to, depending upon where it all lies, where the strikes are, how much time there's till expiration, etc. It's harder to get fills on MVP. So I love MVP. If the market's moving, I'm definitely trading MVP. I'm trading Elite. If the market's really flat, but I can get the reversals really easily on Boomerang. I mean, MVP is a trending strategy. It's not really a reversal. I mean, it's somewhat reversal, but it's not as like that quick reversal-ish. So this is very price, volume, range bound. And we're actually working on rebuilding MVP with the volume and the price range bound action into MVP itself. So we'll be adding that on as, we just added a whole new perspective once we started looking at actual volume versus, expected volume. Let's see here. Any other questions? But I think I got them. I try to wrap up everybody's questions. I try to get them all. So, to get started, the first thing I do is I just hop over and start watching this course. What is it? How does it work? What is volume? Get your data feed set up. We have all that over here. Ninja download, free futures, free Forex data. Check out the scanner, learn how that works. Walk through it step by step. But we already got BMX on Apex Charts ID, so we just haven't released it yet. So that's after we get one more thing done. We had to get volume done. We're getting deviations on every instrument on the planet. That's supposed to go out in the next week and a half. And then we're doing optimization and 3.0. And that's where we'll have BMX on the charts. So it's coming. Slowly but surely. Yeah, BMX trades are awesome reversal trades too. All right. Well, I hope y'all picked up some new things, and just sort of opened your eyes a little bit to maybe not your normal strategies. You got your new strategies. You got your spreads, your binaries. You have your range bound. You have your straddles. You get volume using futures Forex volume to help you trade Forex at night, and then even some like day and weekly strategies for range bound for really part-time trading where maybe you don't have a couple hours to trade. But if you have 1 or 2 hours, you can easily trade at night using some of these strategies. And if y'all have any more questions, please hop on our website. Please ask questions, okay? The simplest questions you got, I guarantee you I asked them at one point. So don't be ashamed or afraid or whatever. If you want to move forward, ask questions, okay? And we'll be glad to help you out. All right, y'all have a great evening.